Now we are joined by Narayan Das Rathi, who's the founder of Srivari Spices and Foods, who's joining us. Hello, Mr. Rathi. Thank you so much for taking the time out and joining us today.
Namaskar.
Mr. Rathi, in which FMCG business verticals is Srivari currently into? Tell us about your business and what are the plans going ahead for the company.
So presently, Srivari Spices and Foods Limited is working with the two verticals. One is spices segment. In spices, we have again spices as well as blended spices. And in wheat flour, parallelly, we are working with the wheat flour. So these are the two segments, verticals we are working in the Srivari Spices.
All right. Very good afternoon, Mr. Rathi. Wanted to understand why Srivari has the right to win in this competitive industry. If you can help us with some more insights on this.
So we are standing out differently, and our focus is on the quality actually. The quality is lacking in the market. Maybe a lot of brands are there and unorganized segments are there. So quality and healthy food is missing in the segment, in the FMCG segment. Overall, especially in the food, if you see, the quality is the biggest issue, challenge and issue. So we are focusing from day one. The Srivari principles are about the quality. First, our principle is on the quality. We are betting on the quality. So we are standing out differently into the market, and we are getting very good response and the kind of sales we can see year on year or month on month. Also, we are planning as a so very good numbers and growth because of the quality and nutritious food we are focusing on.
Right, Mr. Rathi, also tell us what are the channels and the markets that you're targeting to increase your sales. What are your areas of focus?
So presently we are working on the general trade. As a general trade means kirana and wholesaler shops, regular our traditional shops. So we have in Andhra and Telangana overall 15,000 outlets. We are working on that segment, as well as we are focused. Our focus is on the modern trade. Also, we are working in modern trade with supermarket chains like Vijeta Supermarket, Ushodaya Supermarket, Balaji Garden Bazaar, as well as now again we are working with the e-commerce platforms like Big Basket, DMart Online, and as well as we are parallelly again we are working with the B2B channels with the Sol and Jumbo Tail. And as of now we are working in the two states as Telangana and Andhra Pradesh, and our focus is soon we are going to move in the Maharashtra as well as Karnataka.
All right. If you can also throw some lights on the working capital cycle.
Yeah, working capital cycle basically it's a in the general trade or you see modern trade, average out of 45 days of working capital cycle. This is a payment cycles, as well as we have to maintain the flow stock about around 3 months of the inventory we have to carry due to because of we have to maintain the quality parameters. So we have to minimum average out we have to maintain the 3 months of stock. We have to carry 3 months of stock with us.
Right, Mr. Rathi. Also, right now you are your major revenue comes from Hyderabad. Do you have any more plans to cover more regions going ahead?
Yeah, as I said in the last question, as I added that we are now moving towards the Karnataka as well as Maharashtra both. Already we are working in the two states, and now we are planning to move in the two more states.
All right, and also, Mr. Rathi, given that you do have your presence in some of the wheat flours as well, and as we know that India is indeed a big consumer out there, help us understand some about the price trends as well. How are they shaping up? Because we are seeing that the food inflation is still very high in India, and given the commodities, we have seen price hikes in a lot of commodities, be it tea, sugar, and rest more. But how specifically are you seeing the price trend moving for the commodities that you deal in?
See, as if you see focus on the inflation, food inflation, that will not come down. Year on year, the prices will be increased due to the problem that the challenges are into the market. Now, agriculture's or lands are actually they are converted into a commercial lands. So production and as we see year on year, there is no growth in the production. So definitely it will be a challenge. price will be always challenge and continuous it will be increasing.
Right, Mr. Rathi, as I can see from FY23 to FY24, there has been an EBITDA margin expansion and it's currently stands at 16 odd percent. Going forward, are you likely to sustain these margin levels?
Yeah, definitely. Actually, we are parallelly with one more vertical. We are planning D2C. So direct to consumer, we focus with the big portfolio as we are coming out with the oil also. Within 2 months, oil launches already it's a process. So oil, we are focusing on the cold press as well as double filter oil without any chemical process, and it's a completely natural process. Both the oils are. So in that, with that vertical add on and D2C will definitely maintain, EBITDA will be definitely maintained as well as revenue growth also will be maintained as in the past years we can see.
All right, with this, we'll let you go on that, Mr. Rathi. Thank you so much for taking the time out and speaking with us.
If you like this video, then like, share and subscribe to ET Now.